Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at energy and oil prices, kind of holding within that range, finding a home right near the 50-day moving average, right around 68.40, just below that 66 and change. We have the 100-day, so we're kind of entering seeing some levels here that are going to make some technical sense. Right now we're hanging at the 50-day, just below, like I said, the 100-day, and in that wider range we've been looking at from the range that was set over about the past month, at 63 to 73 still is holding as well. So and we're kind of right in the middle, and we're waiting for that next catalyst moment. Likewise, I think that a push higher sees less resistance than does a trade lower. A trade lower is going to find certain points where it loses some momentum, but I think to the upside, if you really start pushing up north of 70 again, I think that the market will probably go up to really much higher, much quicker, and test that 73. So from a price perspective, we are right in the middle, holding at the 50-day moving average. The dollar, really no help today. The dollar obviously off its recent highs, but certainly the trend is still for a stronger dollar. I think this week with the ECB meeting later, it's kind of putting a little bit, taking a little bit of the wind out of the sails of the dollar, which is why it really isn't, I think, having any effect on dollar-based commodities, oil included. But could, after obviously Thursday, we could start to see things move again. Dollar volatility will obviously push oil a little bit, unless we talk about oil volatility. Oil volatility is driven, we talk about the dollar being a lot of the basis for a lot of these trades that we're seeing, but oil kind of has a mind and a world of its own, with the production cuts that started from OPEC. Then you look at what happened in Venezuela, and you talk about sanctions on Iran. We talk about global growth. Yeah, it's been awesome. It's been moving, but what if things pull back, and the effects of higher oil price spikes based on geopolitical risks, the effects on the stock market historically have been negative. That being said, the stock markets are kind of on a separate track, separate path themselves, but ultimately it's going to create oil volatility or commodity volatility, something we really haven't seen a whole lot of. Obviously, since oil broke out, volatility has elevated, but to see those massive price swings is something that we haven't seen. We've obviously seen oil prices move very fast in one direction. We've seen gold move very fast in the other direction, but like I said, they've been moving in the same direction, and I think that we could see very choppy trades ahead for oil as we move forward, especially if one of those variables comes in unexpectedly or changes the outlook, or dare I say some kind of geopolitical risk that we aren't pricing in comes to fruition. So right now, oil market's sitting at the 50-day waiting for an catalyst moment that could take us to 73 or 63. Likewise, not going to happen this week, but certainly as we head into the summer, anything's possible. This is Todd Colvin coming to you from the floor of the CME Group.